moving averages. These two moving averages are one, there's what we call the MACD line, and then there's what we call the signal line. So these are the two moving averages that constitute the MACD indicator. Now, besides the moving average or the moving averages, we have another feature called the histogram. Okay. Now we shall go to the chart, and then I'll bring out this clearly. We have the histograms. All right. Now, the reality of as to whether, okay, what helps you what helps you to identify a signal and as to what you're supposed to do in the market is actually the moving averages. Now, the histogram, particularly for it, it shows you the momentum or the strength in the market. All right, it shows you the strength, it shows you the momentum that is kind of building up within the market. All right, so that's what the histograms specifically do. Now, the histograms, when you go on the indicator, are sort of like bar-like structures. Those bar-like structures that are embedded in the MACD indicator, and you'll see that they will have varying sizes. Okay, then and we're going to look in details on that when you go to the indicator itself. Then we have what we call the zero line. Zero line. Right, now the zero line, in simple term, literally refers to the reference point. All right, the reference point from which the momentum is determined. Okay, right, from which the momentum of the market is determined. And in the build-up of the momentum of the market, you as we shall see, characterized by the different or the varying sizes of the histogram, we shall be in position to tell that as the momentum of the market is building up, as it is increasing progressively, you shall also see a subsequent increase in the sizes of the histogram. And when the momentum of the market is reducing, like traders are losing out, they're losing interest, in the market, or they're actually trying to exit the market, or the market is becoming a little bit dormant, not dominant. You'll also see a progressive increase in the sizes of these histograms. And the increase normally arises from the zero mark, and then it moves up. Same applies to the decrease. It is from whatever height it would have moved, and then it also decreases progressively towards the zero mark. So that is basically how that comes about. Now, let me go to the indicator. Let me just open, my trading view and try to show you what I'm trying to mean. Okay, so let's try to bring it here, and okay, try to clear my chart of that, and then that. Okay, and then this. Okay, so let me bring the indicator called the MACD. Where are you? MACD. Okay, let's see. All right. So this is the MACD indicator. This is how it appears. All right. Okay. All right. So when you check on the MACD, still, as I said yesterday, all these indicators, you can as well go ahead and customize them, but you can also use them in the default setting. Now, the customization will depend on what you really want to. You want it to show or bring out in the market. Now, the MACD, basically, this is how it looks. This is my customized settings of the MACD. And now the MACD, these are the features that we were talking about that entails the MACD. We have this blue line, right? Then we have this orange colored line. Now, these two constitutes what we are calling as the moving averages, okay? And this blue line is what we call the, I'm so sorry, let's try to increase it in size. I hope it is visible enough. Is it visible? Is it visible?
Yes.
Okay, all right. Okay. Now, this line here, let me pick my annotation. This line, we're seeing blue in color, is what we call the MACD line. Okay? It's what we call the MACD line. And then this other color, this other line, which is orange in color, is what we call the signal line. Okay? The blue one is the MACD line. And then the orange one, I don't know whether that is the orange color, but the orange one is what we call the signal line. Okay? Now, these two moving averages, just like the moving averages in the stochastic RSI, also moves together. They move together. Okay? And then when you come to this other part, the zero mark, the zero line is actually this reference point. There is this other part. I hope you're able to see it. It's written 0. Okay. There is an imaginary line here from which the histogram arises. Okay. That is what we call the 0 line. I don't know whether you see. So it's like a reference. It's clear here. See this imaginary line that is running? I hope it is really clear. So from which you have the histogram arising. Okay. Then these bar-like structures are what we call the histograms. These bar-like structures are what we call the histograms. What we were saying that it helps measure the momentum of the market. That is what we call the histogram. So it shows you the strength or the momentum of the market. Now, these histograms here are divided into two. If you see from the 0 mark, we have those histograms that are above the 0 mark. Then we have histograms that are below the 0 mark. The histograms that are above the 0 mark are what we call the positive histogram. Then this other one are what we call the negative histograms, the histograms that are printed below the 0 line. Okay? Now, the interpretation of these histograms in showing momentum of the market is this. As we said, that this indicator helps, it is a trend indicator. It helps you, show the direction of the market. It helps you show the direction of the market. Now, if the market is on an uptrend, okay? If the market is on an uptrend, I need us to get this very clearly. If the market is on an uptrend, what happens is we're going to see the histogram going to be printed being the positive histogram. Okay? We're going to see the histograms going to be printed would be the positive histogram, the histograms that are above the 0 mark. So, just a minute, guys. All right. So the positive histograms. Okay. So the positive histograms are the ones that are going to be printed when the market is on an uptrend. Now, how it will determine the buildup of the momentum of the uptrend, you're going to see a progressive increase in the sizes. So from the zero mark, you'll be seeing the bars increasing in size progressively. So what this one would mean is that you see sorry guys, I have some kids disturbing me. Yeah. All right, so I was saying the strength or the momentum of the market is characterized by if there is an increasing momentum in the market, let's say if the market has shifted direction and it is on an uptrend or in the course of an uptrend, you're going to also see on the histogram, the positive histogram going to be printed. There will be progressive increase in the sizes, in the height of those histograms, okay? You'll be seeing that increase. Now, as you see the increase in the size of histogram, it should tell you that buyers are becoming more aggressive in the market to move the market price where? Up. All right. So the momentum is building up. More traders, more buyers are getting to the market. They're trying to buy more of that asset, and in the process, they're trying to push the market price higher. So once you see a progressive printing of the histogram increasing in size, that is what it would mean. There is a rising momentum. Okay? Remember, when the market price is on a rise, it is the positive histograms that are printed, trying to measure the momentum at which that trend is being built up. Okay? Or the momentum at which the price is increasing. Now, whenever you see the histogram, the histogram decreasing in size, okay, progressively, the positive histogram decreasing in size, it means that much as the trend is on a rise, but slowly, it is losing momentum. The aggressiveness that these buyers had from the start, like we were seeing here, is slowly fading away. Now, as it is fading away, yes, there is some buying activity happening. However, most of the traders are now reluctant to continue buying. Rather, they're just waiting for a slight increase and then begin taking off profit or exiting the market. Or probably even there are already traders who are taking off profit, but just that because the dominance of the market was by the buyers, just the effect of the selling activity is not yet being felt. However, once we see this progressive decrease in the sizes of the positive histogram towards the zero mark, it should now tell you that the kind of momentum that was built up in the process of building up, in building it, that particular trend is now decreasing. Buyers are losing it out, right? Buyers are losing it out, and slowly by slowly, the sellers are beginning to take course. They're beginning to bring about the dominance. All right. So the momentum is reducing. And once the momentum reduces, if you see this progressively decreasing, once it approaches the zero mark, that means really the momentum has gone down. Okay. Now, a moment you see the 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 positive histogram fading away completely, and then you begin seeing an increase in the sizes of you begin seeing negative histogram being printed. That should also tell you now that either that trend has already reversed or there is a retracement happening in the market. But at the end of it all, you are going to be seeing that on the chart. The reflection of whatever you're seeing here would be shown on the chart. Okay. And we're going to see that and what happens when there is a decreasing momentum, when there's an increasing momentum, and then when there is a shift in the market direction. We're going to see that. Same applies to when now the market price is really on a downtrend. Okay, when the market price is really on a downtrend, what you're going to see on the histogram are going to be entirely negative histograms. Okay, negative histograms. What you'll be seeing on the MACD indicator will only be negative histograms. Okay, meaning more of those histograms are going to be printed below the zero line. Trying to tell you that, at that time, there's nothing you're going to do more of like, buying other than, doing taking sell positions. Okay. So that is what it will actually try to mean. Now, how do you trade this? The trading of, trading with the MACD indicator or basing on the MACD indicator to identify selling and buying opportunities is dependent upon what we call the crossovers between those two moving averages. Crossovers between the two moving averages, that is the MACD line and the signal line. Now, if you open your chart on a particular coin and then you come across a scenario where the MACD line is about or has just crossed over above the signal line, then that is a buy signal. Because that crossover, most of the times people refer to it as a golden crossover. It presents a golden opportunity to jump into the market, to take a long position or to buy for the sports trader. You buy and hold, awaiting for the price or the value to increase, and then you take profits. So once a crossover happens where the MACD line crosses above the signal line, it is a very, very good signal. It is a very, very good buying signal. Just like here, we see here. Come across here. Let's just try to cite some of them. Those scenarios where the MACD line crosses above the signal line. This is what we call the crossover. That is the golden crossover. It's a beautiful opportunity to take a long position. Take a long position. Just make entry once that crossover happens. And sometimes the best thing you do is if you open, if you come across it when the crossover is just on the verge of forming or happening, it's the best because that will present you an earlier entry opportunity. Okay, and most of the times, like if you do this or if you saw this in a higher time frame like 1 hour, when the crossover is just about to happen, if you go to a lower time frame, you will actually ascertain that the crossover has already happened or it is already happening. Now, why sometimes it is recommended for you to analyze maybe your coin on a particular time frame, which is a little bit higher than the time frame you're going to make entry on, is that the bigger time frame helps in building up a bigger picture. There is a kind of a noise that it eliminates. It brings you really the bigger picture of what is most likely going to happen. But then the smaller time frame actually begins showing you exactly what is happening now in the build-up of what is going to happen in the big time frame. So here, when you see this, when you cite this when it is about to form, you go to a lower time frame, actually it would have already formed. And if you find that it has just formed, you could even make entry, have an earlier entry, because you know what you saw in the bigger time frame, that there is a possibility of a crossover happening. So you want to take opportunity, you want to take chances, you want to take advantage when it's too early. All right? Yeah. So a crossover like this is good. A crossover like this is good. So this is one crossover which presents a good buy signal. Another one we see here. This is another crossover, that is presenting a buy signal. See them, the crossovers, they're presenting a buy signal. Now, whenever you see a crossover happening where the MACD line crosses below the signal line, it should give you what we call a sell signal. Okay? So when you open your MACD indicator and then you find that a crossover has just happened, don't take long position. Rather, take short position. But remember, as you're going to be doing that, you're not going to depend entirely on the MACD alone. You need to confirm on the chart. You possibly need to have a little bit of, you need to draw in a few, trend lines, support and resistance. You just want to identify, you want to have a common area, what we call an area of confluence. You want a point. You want, your analysis to have meaning, okay? You don't want to base on one thing alone. You need to confirm using another supporting tool. So if it is, and you find out that, yeah, I think it's literally telling me what the other, support tool told me, then I think we're good to go. That's when you check. You now make entry because you would have confirmed. Okay. So whenever a crossover happen where the MACD line crosses below the signal line, it is a sell signal. No doubt. Just do it. Just take a sell signal. Now, what will give you the confidence? What will give you the confidence with regards to how long you should stay in that trade will be the momentum. Okay. Somebody unmuted. Okay. Who is? Okay. All right. And we're going to take an example just like we did yesterday in the other coin, the Jup coin, the Jupiter. Those who traded it, I think, made some profit. Yeah. Later on, I shared how we were doing it, and we observed some good opportunity to take a long position or to buy, and I did share that signal of 3%. And yeah, those who entered it, I think, made the 3%. Yeah, even if it was only $3, it was something, right? Yeah. So I was telling you that what will increase your confidence as to whether to remain or stay long in the market on that coin, or exit, or take huge TP or small TP would be the histogram. Okay, would be the histogram. First of all, it is going to be under. You're going to take into consideration two things. One is the type of histogram being printed. Two is the size, the character of the signal of the histogram being formed. And three, it would be at what point has the crossover happened. That is in case of the what? We're talking about the buy signal. When you want to identify a buy signal, okay, you identify around three things. One, the position or the spots where the crossover happened, where the MACD crossed above the signal line, and two, you look at the type of histogram printed. Okay, is it a positive histogram, and is it a negative histogram? Then three, you go ahead and confirm what is the strength or the behavior of the histogram that has been printed. If it is a positive histogram, how is the sizes appearing? Is it progressively increasing? Is it the same size? Is it decreasing? Because that should also be important to tell you, okay? On how much, it will help you determine how much TP you're supposed to take, okay? Because sometimes the momentum, yes, a crossover can happen, but then really the market is in a state of consolidation. It's a sideways market where there is really no clear breakout, to bring out a clear uptrend. So in that case, you'll find that the coin will be trading within a specific range, not breaking above any above that particular price zone. So it may be just a consolidating market situation. So the momentum will tell you. So the histogram going to be printed should be in position to tell you that. All right, should be in position to tell you. Now how? So if the histogram that has been formed, we're talking about a buy signal, remember? So if the histogram that is formed is a positive histogram, if it is a positive histogram, meaning a histogram that is being formed above the zero line, you need to watch keenly on the size, because that is what is going to try to give you an insight with regards to what traders are doing in the market, how the momentum is building. Because normally the momentum builds up slowly and progressively, right? So it should tell you, because that is what is going to give you the confidence of taking a bigger TP or just taking 1% or 1.2 or 1.3 or 5 or 2%, right? So it's the behavior of the histogram, positive histogram going to be printed. If the crossover happens below the zero line, okay, like in this scenario, okay. Before I go to that, let me come back to an earlier crossover that happened here. Like in this case, this crossover happened below the what? Below the zero line. It is below. Now, this crossover happened right here. Now, what you're going to pay attention to, remember we said it is the what? What is going to determine how long you're gonna how long you're gonna stay or how much TP you're going to set is that, first of all, the crossover that has happened, where the crossover happened from, and then the type of histogram being printed. So if the crossover happened above, okay, your emphasis is going to be on the strength or the momentum of the market, which is going to be depicted by how the positive histograms are being printed. If it is progressively increasing, it will be telling you that, the momentum is building up, so you could stay a little while. But if it is, it is not very clear, you find that it's a mixture. Sometimes it rises like here. It is rising and then trying to fall a little bit, then it should tell you that it's probably a ranging market, so it may not be the best for you to make entry. Or if at all you're going to make entry, then take a very small TP. Be there, monitor it so that you take the little you can and then be off the market other than being floated in losses, okay? So that is the first scenario. The second scenario is if the crossover happened below the zero mark, okay, you're going to pay attention to the histogram, because it is going to tell you the momentum trying to happen there. Now here, remember, once the moving averages are below the zero mark, it was previously a downtrend, right? A serious downtrend. Now, a crossover happening here is a sign that the trend is reversing. Okay, it is about to reverse, or it is already reversing. There is a change, a shift in the market direction. Now, if there is a shift in the market direction, you're going to see that if a crossover happens, you're going to see also a progressive decrease in the size of the negative, in the sizes of the negative histogram. Towards the zero mark, okay, you'll be seeing that decrease. It will be more of like a decrease towards the zero mark. Okay. Now, as that happens, if you ascertain yes, it has happened and you have confirmed through this progressive decrease, then that means it is a good opportunity, because there is a likelihood that the trend is going to continue, and what you're going to observe at a later time is now no longer negative histogram, but rather a buildup of positive histograms. And staying more longer will be ascertained by how the positive histograms are being built up, because that is what is trying to tell you about the momentum of the market, or the momentum at which that trend is building up. All right? Yes. So I hope that is clear. I hope that is clear before we go into, we come back here, because we want to do this in real time and see and predict what is going to happen. So is that very clear for everyone? Okay. Is it okay for everyone? Is it clear? All right. Okay. Um. Okay. So I think okay. That's okay. That's okay. I got it. So let's come back. Now, the first thing we're going to build for first principle, price action, and the indicator is going to be a supportive tool, and our major area focus is going to be price action. So you already know about support and resistance. I believe you were told that in your building up of a good support and resistance drawing, you base on the current market price, right? You build up on the current market price. You want to make your analysis based on the current price, and then you backtrack, right? So you backtrack whatever you get from history will now help you tell what is most likely going to happen in the future. Now, we have just had a crossover. This is 1 hour time frame. Let's see how this is going to work, okay? We have just had a crossover here. We have seen that the crossover happened below the 0 mark. And we can confirm that indeed this crossover is a good crossover because there was a progressive decrease in the selling momentum, but rather more buyers are getting into the market. So the selling pressure is reducing and the buying pressure is increasing. And we even further confirmed by the establishment of more positive histogram above the 0 mark after this other one fading away, the negative histogram. And then later on, we actually realized that through what we're seeing here, there is indeed the momentum built up right from here, and it is still continuing to build because we are seeing there is a progressive increase in the sizes of the positive histogram. Now, that is not enough. We are going to go to the chart. We're going to go to the chart, and what are we going to go and do to the chart? Number one, we're going to demarcate our area. We have to demarcate our area within which we want to, make our analysis. Okay, so you will mark your zone. Okay, you just come here, you mark your zone. You can decide to pick it like this. You can just decide to pick it right before, from here, maybe right before somewhere here. Here, then sorry, around here, okay, then you mark your zone, just mark them, your zone, okay, that is the area, minute, okay, so that is my zone. That is the zone I would want to, because my interest is, I know where my market price is, but I just want to look slightly above and below so that I have an area an area of view within which I want to concentrate the analysis on. So now I've done that. Now I'm going to demarcate my support and resistance area, okay? Because in so doing, I want to see how much will I take? How much can I take as profit? And then how much do I establish for my margin call drop, just in case it doesn't really go in my favor immediately as I intend to. As my interest was, okay? So to draw the support and resistance, it's key from principle. Just identify where your market price is. And to draw your first resistance, you need to look slightly above and then backtrack in history. The first point you're going to encounter as your most recent swing high, the most recent swing high, that becomes your first support area. It becomes the first area you are expecting the price to react to in case it continue going up. That is the first area you're most likely going to see a reaction by the price. Okay? which reaction can be two. There will either be a breakout above that level, or there will be a rejection, which will simply mean a reverse market price movement. Okay, it's just like knocking a block, and then the effect of the knocking pushes you a little bit behind, a collision, and then because of the strength of that particular block, then once you hit it, you're going to be pushed back, right? But if the strength of whatever was moving was so hard and was able to push through whatever block that was, then it's going to go through, right? So that becomes like just a block, a reaction point. So somebody is disturbing the screen. I don't know who that is. Or maybe you can share your screen. Share your screen and then carry on from there. I don't know who that person is. Come out and you make you share your screen. And I think it should be, I don't know. So you don't draw the thing, yeah? I can give you the last 5 minutes and you share your screen and then do what you want to do. Okay. So let's draw our first support. Let's just identify. We're going to draw just the first two supports and then the first two resistance. Then just to guide us, because we know a crossover has happened, but we're really not very sure, because what we're seeing here, will scare someone. You say, but now the price is going down. A crossover has happened. What is going to happen here? Do I enter? Do I wait? So what will come out is it will be from the results of what we're going to draw to have a confidence. Fine. All right. So let's mark our first resistance. So this is where our price is, right? So any movement that we're going to make, any support or resistance we're going to make, the first support and resistance will be dependent upon the market price. So the market price becomes like a reference mark. So we're going to go up, 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 up slightly. Let's move up and then backtrack. The first swing high we encounter becomes our first resistance area or line. Okay? And how do you arrive at a resistance or a swing high? You will just need to look at a previous movement of this nature. That you should look at a movement like this and then this. Any movement in that manner, in the form of an inverted V, that peak becomes the swing high. Okay? Just in a simple way. So to me, that's according to me, I will think that when you move up, the first clear swing high would be exactly this point. Yeah, because the price moved up, and then so that part becomes my first swing high. So that is where I'm going to draw the first resistance line. If I want to draw a resistance line, I'll do that. If I want to capture it as a resistance area, then that means I will have to put that and then draw this, and then I have that. Okay, so that is my first price reaction zone. Then I'm going to draw my first support. So similarly, we're going to go down. We have to move down with reference to the market price, then backtrack, and then we look at any point where we are going to identify our swing low. And to identify our swing low, after identifying, we're going to mark that as our support. Now, to identify your swing low, simply, you're going to look out for a movement, a previous movement that was like this. The market price dropped and then rose and to where the market price is. So that V edge, that pointed part becomes your swing low. All right, so that is where you're going to establish your first support. So the immediate one we encounter after moving down and backtracking is actually this. So you've marked your key price reaction level. So meaning, in this case, if I decide to enter current market price, I will take my profit to this level. To this level. I'm not going to assume that it's going to break above, because when you're trading, you don't assume, right? You know that the price is going to rise, but because you've identified a price reaction zone, this is where you know that there's a possibility of the price reacting. And in the reaction, normally there are only two things. There is a reaction that leads to a break above. Okay, there will be a breakout. There will be a breakout above that level. Okay, which in this case will be a good sign for you to remain in the trade a little bit longer as you backtrack and check out for the next reaction level with reference to the first level. But as the price is coming up, you know that there is also a possibility of a rejection, meaning the strength, depending on the momentum here. If the momentum is sufficient enough, there will be a breakout. But if the momentum keeps on reducing in the course of the build-up, then as we shall, see is evidenced by maybe a decrease, okay, in the size, in the sizes of the positive histogram. That's when we shall say, there is a likelihood that this point is this point is going to reject this price. As long as you see on the MACD indicator, there is a decrease in the momentum, all right? Depending on how the histogram is going to be printed. If you see it reducing in size, that means the trend is losing momentum. So there's a very low chance of the price breaking above. So there's a high chance of a rejection. Okay. So in this case, what that would mean is that this person here, you keep on disturbing the screen. You keep on disturbing the screen. Now you draw. You draw, You draw. This person, you can draw. Because you think you need to write. You want to write. You can write. Okay, so that is what is going to happen. So you know that in this case, if you were looking at benefiting, taking an opportunity for a bigger TP, it's high time for you to cut the TP and take whatever is within this zone, which in this case is like 10%. You can take the 10%, right? Yeah. And then you wait for another opportunity at a later time when the momentum builds up and then there's a break of structure above that level. Then you look out for the next resistance zone, take your profit within the zone as well. So you keep on taking partial profits depending on the zone. Okay? Yeah, you use the price reaction zone as the area within you are supposed to take TP. Okay? You're supposed to take your profit. Okay. All right. So if I decide to enter at current price, that is what I'm going to do. Then just for purposes of being safer, because anything can happen, there can be a shift in momentum, and before I know it, the market price may decide to drop. Why it will decide to drop? Because simply there are people who made an earlier entry. They made an earlier entry maybe from somewhere when the trend was just building up, or when the price was just rising from here. So to them, this is a good TP. So they may just want to take off this percentage. This percentage is about 9%. So maybe they just want to take off profit. So if more traders develop similar mindset of wanting to first of all take off the 9%, that is when you're going to see the market going where? Going down against me after making entry at this level, because these people would be taking off profit. Okay? So that means I will have to wait, but not just waiting. Why I'm establishing this, I'm measuring this, I want to get a range in the market price drop that is most likely going to happen, such that I can establish my margin call to benefit from, buying at the different price level as the price is going where? is going down. That's simply what I want to do, because there is the reason behind this is why I would want to continue buying is I want to acquire more assets at a lower price, at different price level, but at the same time, my interest is reducing the floating what? Loss percentage. I want to reduce the floating loss percentage by always, moving, trying to close the gap or bridge the gap between the market price and the average price going to be established at every level where the robot executes a buy order, because that is the goal. And if you base on the martingale strategy or the dollar cost averaging, you will even exit the market more earlier or faster, because that's in a scenario where you continue buying as the price is dropping. In case it happens, you realize that instead of waiting for 9%, okay, rise before you can see yourself floating in profit, by the fact that the robot will be buying along, the drop, you will realize that you won't have to wait for the 9%, because imagine the robot bought at this point and the average price is now here other than somewhere there. So that means you just need a small market price movement before you can be out of the market. Okay? Because from here, if this is the average price, which we all know acts as the reference point upon which a floating profit or a floating loss is established, then it becomes more easier for you to understand the benefit of allowing your robot to continue buying the dip or opening margin calls, because it's very important. That's where the magic is. Okay? It is not in making entry and then relaxing, but rather making entry, establish some margin call, called margin call drops, percentages, so that the robot can continue buying as the price is going against you. Because your goal is you want later on you to get out of the market faster than somebody who just bought once and relaxed, or allowed the robot to just buy once and relaxed. Because that is where now you find differences in somebody complaining, mine has not yet sold, oh, I'm out, oh, but mine is still floating. That is the difference. That is the difference. The difference comes in on how you actually set your, the parameters for your robot, how you establish the multiple buying ratio, and how you also establish your margin call drops, and then allowing your robot to continue buying the different price drop levels. Okay? Yeah, so it is very important to always put in the back of your mind that you need to have some margin calls. Okay? You have to have some margin calls. It is a must if you understand the concept of trading, especially the martingale strategy upon which the Royal Q bot has been established. You always want to allow your robot buy. So you will partition your capital accordingly to always allow the robot to try to take advantage of whatever drop that the market price will have, so that it buys and buys and buys, because the end goal, want to get out earlier. So about that, we're gonna you will have a session probably on the settings. They will explain that more when they're doing the trade settings. Okay, so when you do that, if I decide to enter that, so that's what is going to happen. So I'll have a little bit of confidence now that if I make up my mind to enter current price, I should have up to about 9%. I should have a call drop. Okay, I should have a call drop of roughly about 9%. So meaning how I am going to partition, okay, my margin call limits. My margin call, the call drop, the number, the margin call limit is going to be dependent upon my interest. You have a drop of 9%, so you can decide to partition. You can decide on two things. One, you can decide on the number of margin calls to establish, and then you go ahead and distribute this 9% on the number of margin calls you have established. So if you decide to go for four margin calls, okay, you want to establish 4 margin calls, that means you need to divide the 9% drop within the 4 margin calls. Okay, establish them within the 4 margin calls. So how you're going to establish? Always remember this. As you're establishing the margin calls, establish it in such a way that there is an order of increase in the value. I repeat, as you're establishing the margin call, avoid uniform figures. Always establish a a progressive increase in the numbers. For example, if you decide to establish 4 margin calls to cater for the 9% drop, when you're going to be distributing the margin call drops on the different price level, if the first call, you can decide to say it is 1%. Second call, you can set it maybe 2.5%. Third call, set it to around 3.5%. This is now how many? This is 5, 6, 7, roughly 7. Okay, you can set it at 2. Okay, let me just see. Let me see. It must be in an order of, let's say this is 2, then maybe this is 3. Then on the fourth call, you can now create it. This is 4. You can decide to set this as 5%. Why? If you're observant, just from what I just explained, that when the momentum is building up on a particular direction, be it a retracement, especially when the trend is reversing, or when the trend is in a particular direction, the momentum doesn't build at once. It is a progressive build-up. Now, if at all the price is going to drop, it doesn't begin dropping with a lot of momentum. Begin small, and because it is beginning small, do you know what happens? Psychology of trading comes in. Some people who were in the trade and sees that the market price is beginning to drop, maybe they were already in profit of 2%, and then they see it dropping to 1%. Fear is going to set in. Then they're going to say, this price may drop, and then I get into floating loss. Let me close my trade. Let me close and take the 1%. You know, now, if you have that psychology, and if you understand the psychology of trading, that if this person is going to think like this, it was at 2%, he or she was excited, thinking that maybe it will go to 3% or 4%. But before he or she knows it, he or she sees the boat. On the boat, the percentage is again dropping. Instead of 2%, it is now at 1.5. Before 1.5, it is now coming to 1. The fear of losing out is going to set in. Now, the trader will say, you know what? Let me take 1%. Other than going to floating, let me just close this. So the same way you're thinking, it is the same way different traders are also thinking in different parts of the world. They are thinking of, let me take also this. Let me also exit the market. Let me also take this. I'll wait for the next opportunity. Now, you realize that the momentum at which the price first of all started dropping was slow, right? Then, as the price was dropping because of the fear, more traders are going to begin exiting the market. And that is where you see a serious drop. Now, within very small minutes or very small second, you're going to see a huge drop in the percentage. That's why from there you have to derive this understanding that as you're establishing the margin call drop, establish them in the order of increasing figure. I don't know whether that makes sense. I know I'm now I'm going into so much. I'm going into so much, but I hope it is making sense. Okay? I hope it is making sense. I don't often share this so much, but you're lucky. Okay. But that's the secret. Now that's the idea. That's the idea of doing this. That's why when most of the videos I share, even when on the settings alone, okay, if I'm explaining something, if I record a video on trying to explain something, there's a lot that you need to pay attention to other than just following the video. There are a lot of things they tend to bring in that sometimes for very many people doesn't make sense. But if you look at it critically, there's always a reason behind. There's a very serious reason behind. The way people set their robot, first of all, personally, I wonder because people, it's like people, not all, but it's like most people are really gambling. Eh? First of all, they have not understood the concept of trading. They have not understood the concept upon which the royalty board has been built. They don't understand psychology of trading at all. They don't understand what the behaviors of traders in the market. They don't. They just think about, you find someone setting, for example, the margin call drop. Oh, I'm establishing 5 margin calls, okay? In each of the call drop, you're establishing 1%, 1. Really? 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 It is not. it's something that that we need to really be very careful on. It's time to begin really understanding these things. You need to trade with understanding. Huh? Yes, it's easy. You can do the trading, and sometimes you don't want to. You don't have to complicate it, but also sometimes it's worthwhile you understanding certain things. Yeah, because it's really very important, especially two areas of the robot, which so much relates to the market situation: the multiple buying ratio, and then the margin call drops. My friends, I wanted you to borrow a lift. Just look at how the default settings is. Do you think they just put it there for the sake of putting it? Hmm? There is a reason. And be observant. There are a lot of things that happen in the market. There's a lot of psychology of trading that once you understand, honestly, you'll have a good and a smooth trading journey. Anyway, that's laid aside. That was just but I'm glad you got to understand that. So as you do the establishment of the margin control, please distribute it in that order. Just like we tend to recommend so much of you using the Martinga strategy, the double up. It is very important for you to also understand that concept. Hey, okay, all right. So if you're going to do that, so with this area already established, ladies and gentlemen, you are going to be in position to now decide what you're going to do. Are you going to wait for a drop first, then make entry, meaning you are waiting to, you're going to use a preset? You're going to use a preset? And if you're going to use a preset, then you have to decide, are you going to make entry at current price? Because also the other things with the preset is you are really, yes, the price drops maybe at a later time. Sometimes really that doesn't drop. You'll set your preset and then wait even sometimes even for 2 days because
We cannot hear you, Coach Musa. We cannot hear you.
okay, sorry about that. Sorry about that. Okay. So I'm about to wind. I'm winding up. So let me just finalize on that part. So what you're going to do here, another secret. You have 1 hour, right? You have a 1 hour time frame. You have your demarcation of the area that you want to make your concentration in. Now you are in between a point where you are in the point of deciding, do I enter at current price? Do I wait for a drop? What happens? What do I do? The answer is here. Go to a lower time frame. I love 15 minutes. Go to a lower time frame. Have a look at the market. Yeah, go to a lower time frame. It's okay. Go to a lower time frame. Go to 15 minutes. You can go to 30 minutes. Any of your choice. Go to a lower time frame. Try to have try to look at what is happening in the market. Huh? Do you see what is happening in the market? What is happening here? Look at the momentum. Look at the moving averages vis-a-vis what is happening here. Eh? Do you see what is happening? Now, to me, if I am fair, because now here there are 3 ways in which I can decide to, I can decide to make entry. I can decide to make entry at current price. I can decide to make entry at a preset, a slightly higher preset, I can decide to create a bigger preset and wait longer. But to me, what I would advise is you could make entry at current price. Current price and establish, do you know what you call mini support levels? Look at this area. Okay, look at the first zone here. This is one. Look at this. This is what we call being intentional. Look at this area. It's just I don't know. But let me handle this for this case. But there's always there's a smart money concept that I love using. But let's use the support and resistance here just to have an understanding. You see some of the things. Okay. You see here. I want us to, I can decide to enter in a lower time frame. I can decide to enter at current price. This becomes my margin call, the first margin call drop. This becomes my second margin call drop. This, yeah. And then that becomes my margin call drop, the third one. In a lower time frame, this becomes my third. To me, I can decide to enter on current price, and I'm very sure it's gonna be a beautiful. Yes, it will drop a little, yeah. But in the process of it dropping a little, because it's a small time frame, whatever momentum is happening here, I'm seeing two things happening. There's a likelihood of a crossover happening, which will be confirming the other drop, and then also there's a decrease in the momentum. Okay. And which will also be confirming the drop. However, it may not be it may not take long, because this is a very beautiful trade. If you look at a higher time frame, it's a good opportunity. It's a very good buy signal. It's a very, very good buy signal. If you look at in the long time frame, in the bigger time frame, it's very beautiful. The course of the day, we're going to have probably the 10% going to be hit. So if you're a short-time trader, it will really not make sense to you. But to me, in a longer time frame, me entering at current price and establishing margin call, I am pretty sure with what is happening here, 4-hour time frame, you see there is a decrease momentum. There's a decreasing momentum in this trend. You see here, the negative histograms are reducing in size progressively, and they're tending towards the zero mark. And the two moving averages are coming at a point of crossover. They are meeting. They are trying to emerge. And in the course of the day, this is going to be massive. 10% is beautiful. Okay? 10% is going to be beautiful. Now, if I want to ascertain this, I want to really also be very sure, I'm going to add in the other indicator for yesterday, just to see if we are having, if we are really within the oversold or within the overbought. And perfectly said, we are within the oversold region. So this is a beautiful opportunity that we have two indicators. In addition to our support and resistance concept, we are looking at the market being in the course of an uptrend. It's a reversal happening because this coin has been oversold. We are within the oversold region, so it is a demand zone, and traders are going to demand, and then the momentum is going to shift because it is already shifting. From here, we are seeing there is a momentum shift from a downtrend to an uptrend because we are seeing a characterized decrease in the size of the negative histogram, and it is tending towards the zero. The next thing, before we know, by maybe midday, we shall see positive histograms being printed already. Maybe by late evening, we shall see positive histogram. If nothing changes, 10% is good. But 1%, 2% is easily achievable if you don't want to wait long. Okay, that is the bigger picture. So these noises we are seeing in the smaller time frame doesn't have to scare you, because in 1 hour we already saw the possibilities of what is going to happen. We know where the price is most likely going to drop to, and then later pick up, and we know the TP, what the intended TP is. Personally, I'm going to trade this, so it's good, it's beautiful. Eh? Yeah, so just briefly, that is how you get to use the MACD in combination of the stochastic RSI and then support and resistance to have some area of confluence, and then make a decision on us to make entry at current price or at preset price, just in simple terms. I hope this has been beneficial. I know we cannot really do all, we can really not do really much, but at least the little we have done should be able to propel you and yeah, try to make a difference. Okay. One in the next 2 minutes, please, if there is any question, please. I'm happy to answer. And if it is not there, then I will hand you back over to the leader here, leader Doris Angel. Okay. So we are good. If there is any question, you want to talk, you can raise your hand. If you want to just share a message, that's fine. You can share the message there. And yeah. Yeah, Becca, I'm not Coach Mo. I'm Coach Musa. Yeah, I'm not Coach Mo. Coach Mo is here. Where's Coach Mo? Coach Mo is around, but I'm Coach Musa. Yeah. Okay, I'm Musa. I'm Musa. And the other one is more pure. I hope you understand the difference. And about the YouTube, I have a YouTube channel, and it's called Smart Traders Academy. Yeah, there are a few videos there. There are some videos there that you can take advantage of. You can learn something out of that. Yeah. Most of the trainings, I really don't record them. When I'm doing trainings, I rarely record them. Why I don't do that is simply I always want people to be in attendance. So if you miss it, that means, yeah, next time better. But the group is there. There are a couple of videos I've recorded on certain concepts, on certain things regarding market analysis, and then also in the settings of the bot. Yeah, you can pick something from there. You can go and learn and pick something from there. Yeah, and yeah, and then but it's the recording is also going to be dropped on. It is called Doris Angel Hub. Let me try to see if I get it right. It's called Doris Angel what? Please kindly, Doris Angel. It's called Doris Angel Hub, I think. Let me check. I'm not good at mastering the. Yeah. It is called Royal Q Revolution. Huh? Oh, the name has been changed. It is called Royal Q Revolution. Yeah. Doris Angels. So you'll find it there on the Doris Angels YouTube channel called Royal Q Revolution. Yeah, I was used to the other one, Doris Angel. Is it Crypto Hub? I'm not remembering the name well, but you'll find it there. But mine is it is called. Let me just type it here. It is called Smart Traders Academy. Yeah, you'll find it there like that. So that's how you're going to find it there. So if you type it there, you'll find it there. Or probably the link is. Let me just see if I can share the link as well. Yeah, you subscribe as well. You can subscribe. There's some videos I don't so often share, but when I share, it's really good. It's good content as well that can help, because our goal is to just make sure we help. We see how we can help you guys get a few knowledge and skills here and there to help you propel well, move through this this journey. It says, let me just drop the link here. You don't forget to subscribe. You subscribe. Some people find it difficult to subscribe. Subscribe to Royal Q Revolution. Subscribe. You subscribe to any channel that you feel you at least get you get some content, some educational content from. It is always very helpful. Yeah, we have a couple of leaders with good YouTube channels. Yeah, you can as well. So that is that I've shared the link to the YouTube channel there. Yeah, there are very many videos, very many. You can choose the one you want to learn from. But okay, all right. So thank you so much, guys. Leader Doris, anything to say before we can call it a day, a morning? I believe we have some. Do we have? I think we have some. Do we have some meeting at 10? Yeah. I don't know what we have to do. I've not seen the timetable, but I think there's some meeting that may be there. Sniper, your hand is up. I don't know. Do you have a question?
Yes, please. Good morning. Good morning to you all. Thank you very much. May God bless you, Leader Musa, and God bless all of the leaders doing the Zooms and helping directly and indirectly our community. Okay, I have one question. My name is Leader Aminata.
Oh, yes.
I have one question because sometimes I have the doubt that I haven't tried it yet, but I just want you to clarify it if possible, if you can allow me to ask. Okay, my question is, for example, as this AGT, I took position yesterday with my downlines, and we are in floating loss, okay? And yeah, as now in floating loss, as a future trader, is it advisable? Because as you have made the analysis, we confirm we are, for me, I know that it will go back up because we took the long position. Okay. So now, for example, if I want to open margin calls according to my calculation, will it be helpful or may I not open it? Just I want to know. Yeah, like for example, the call that I will open from the next maybe for example I use 10 margin calls and I am on the 7th or on the 6th. And if I decide to open one more or two more extra calls, like from the number 8 call and 9 call, can I set it? Is it possible to set it for it to sell and make me get profit on the 2 calls that I will open? Or is not need for me to open margin calls as is in future trading? Please, thank you.
Okay. Yeah, it's okay. There are two things here. Personally, I'm going to share my experience. I'm going to share my experience. There's something I've noticed. I'm still in the study as well. There is something I've noticed when you're opening when you set, for example, your strategy mode on the sub-bin real-time settlement. Okay. I've realized that okay, I've had it in 2 occasions that when there are some instances where when the bot is selling, I don't know, sometimes it ends up closing the trade with that particular profit it has sold. Okay, instead of waiting for for the entire clear out. Once it sells that, it clears it out. All right. It was only one occasion where it did sell. So since then, for me, I've really refused using the sub bins. I always use the wall warehouse now because with the wall warehouse, if you open margin call, like for example, if it is in the 5th, it is in the 7th margin call, and you open the next, okay? The only thing that is going to do is going to yes, it is going to add in more margins, okay, into the trade. Meaning, in that case, you're having more fund exposed in the market. And should you have little maintenance balance, that means you're tending towards, the liquidation zone, right? If you have some small maintenance balance. Because the idea is what will keep you open in that position, or what will keep your position open, is as long as you have a maintenance margin that is sufficient. If you open another margin call and the bot buys, you'll still not be so much at risk of liquidation, okay? But if you open a margin call and the robot buys, and yet you have a fixed maintenance margin, but probably that is the only balance you have, then it's riskier, okay? It's riskier. You would rather have whatever you have already exposed in the market and have a balance just to keep the position open
Yeah.
and keeps you a little bit away from that
From the
aspect of
liquidation.
risk of liquidation. Yes. So to me,
Okay.
I would advise the best you can do is if you have extra fund, it's fine. You can open because there's also what it is going to help you do. It is going to it is going to baby.
Your voice is breaking. I didn't hear the last part, please. Can you repeat it?
Yeah, I'm going to explain. So what I was trying to say is the best you can do is if you open if you're going to open a margin call, okay, and you have some extra fund, you allow the robot buy once more because what it is going to do, it's going to alternate your average price. Okay.
Yeah.
It's going to be it's going to move it a little bit again. It's going to create a difference in the average price. But then the only risk is if you don't have any other extra balance, leave it the way it is. Okay. But if you have some other fund, which upon opening a margin call and then the robot putting more fund there, you are going to have you're going to add in more fund, then it's going to keep your maintenance margin high. Let me just try to share my screen and try to explain this because it's a common thing. It's a common thing I've experienced as well, and and I think we could sort that out. Now, I hope you see my screen.
Yes,
you see,
please.
I'm going to divide this into two. Let's assume this is the capital we have, right? This is I mean not the capital but the margin. Okay. This margin is what we are going to have our leverage multiple on. Let's say, for example, you chose a 10x just for example for explanation purposes. So literally you have $1,000, right? Availed to you virtually for trading. Now the best you could do is if you have all the $100, okay, and then an initial margin of, say, for example, $5 has been picked, that is the $5 you have decided to risk in the market. It means whatever balance which is there, which is the 95, is actually your maintenance margin, right? It's what is keeping that position open, right? It's like you've already given out the 5. That is already what is in the market. You have risked it. If it is lost, it is okay. If it gives you a gain, it is okay, right? But you have your 95. Now, any other time the robot buys again, it's literally like you've again picked another $5. You have risked it in the market. You have a balance of 90, right? So in total, you have $10 in the market. You've risked it. So you have 90. It is the 90 going to remain, is the 90 going to keep that position open? Now, the more the robot picks the money, taking it into the market, the lower the maintenance margin becomes. Do you understand?
Okay, I
now,
see.
If it reaches a point, for example, you now have 50%. 50 is in the market, 50 is the maintenance balance. Do you see? It is now 50-50. 50 has been risked. Now 50 is remaining as a maintenance balance because every other time the market goes against you, there is always a progressive decrease in the maintenance margin. You get that? It's like consuming something. It is consuming it slowly. You know, you're driving, slowly. The
Like a
more you
gas fee.
drive, the more distance you cover, the more the fuel keeps on doing what? Reducing.
Yes,
Because it is being used up. Now, if you overuse your car and then the fuel gets done, what happens? The car stops running, right? The system closes. You understand? It will close. Now, the best you can do is you just add more gas. You add more fuel, right? Then you can keep going. But if you have that is the only fuel you have and it is consumed, you stop there, nothing more. So the only thing you're going to do every other time you're opening up a margin call, make sure you have a good maintenance margin. That's why it is always advisable that if you have, for example, you have the 100 which you intend to use, divide the 100, the margin. The $100 is your margin, right? You divide this 100 into 2. Okay? Retain the balance maybe in your funding wallet or your sports wallet. Transfer the 50 first. Okay? Let all your settings be within that. Let all your settings be within that, the $50.
The
So
50.
if you choose
Okay.
the 10x leverage, that means literally you will have a virtual $500 to trade with. So all your settings should be within this. Now, it is at a later time where if you see the market is continuing to go against you, then you transfer the balance to keep your maintenance margin higher, and then you'll be off the liquidation. You get that? Because the more you add fund, the more you have more maintenance margin and the lower the risk of liquidation. Okay, it's a concept that I think maybe we shall have a moment and explain it better. But that is really the reality of my discovery. And it is what happens. Okay, it is really what happens. And if you use this approach, you will run away from liquidation completely. And I guarantee you that. Okay. So for you, what I can only advise, the market looks okay. Okay. The best you can only do is you relax. As long as it has not floated so much, at least you've seen we have a roughly around 10%, which if all goes well and nothing changes in the course of the day, that 10% is going to be hit, right? It's a possibility of achievement. But then you adding more, and then maybe later on something happens in the market, that means you have risked yourself more. You get that?
Okay.
Yes. Yeah.
Okay, and my leader, please, I one more question, because this is the opportunity for me to ask, so that
Okay.
I will not disturb
All right.
you, because it can also help others. Now, the question is, for example, as the maintenance amount of money, like for example, my margin call is 7, I have extra 500 that is maintaining the trade for it to not get liquidated. Okay. So, for example, if the trade goes in my direction and give me profit, like for example, I put 1%, but my leverage is times 10, meaning I'm going to get 10%. Okay. So now, if I increase from where it is now, the 1%, like to 3 or 4%, if the coin goes in my directions, that maintenance money that was be taken as gas fees, will it come back, or that one is over? It's just a question for my downlines, please.
Please, I beg your pardon again.
Like for example,
yes.
let me repeat it. For example, as you explained, if I have like money to maintain the trade, okay, for me to not get liquidated, like for example, let's say 100 or 200 or whatever amount it is. So as far the trade is on consuming, it will be consuming my maintenance amount, right?
Yes.
Okay, so now if the coin go retrace and go back into my directions, like in a way to get profit, that maintenance amount of money that was be consuming, will it come back, or that one is over? Please.
Now, let me explain. Now, let me share my screen again. I'm going to explain it in a very simple scenario.
Thank you.
To you to understand. Let me just do this. Because now that is futures is nice, but I want us to understand this concept. Future, allow me use this word. It's like betting. It is an agreement between you. You know, there's one thing we tend to forget. We think money is just there in the market for us to pick. Now, we are trading in an exchange where we are entering an agreement with that exchange. So we are betting. We now have $100. I'm going to explain it based on just the same example. Out of the 100, you have deducted 5. You've taken it this side, right? What is your balance? 95. So let's assume what you're trying to do here is you are betting, right? You're saying, okay, let's start the game. So if you get this question correctly, you have $5. Okay. If I get it correctly, it will be what? I will take the $5, right? So you started a question and then you gave the exchange how much? The $5, right? And then you're waiting for the next question. And then the next question turns out to be wrong on your side. You again pick another $5. You gave the exchange, right? That is now a scenario where the market is going against you. You predicted it to go where? Up, but now it is going the reverse order, right? So what the exchange is going to be doing, every other time the market price goes against you, you'll be seeing I'm just going to explain it in this way so that you understand. You'll be seeing an amount being taken. All right? You'll be seeing an amount being taken the other side. This is 70. This was 75. So you see an amount being taken to the exchange. In simple terms, what literally this means is that you'll be seeing your maintenance margin reducing. Right? It is reducing. It was $100. The market is going against you. It is dropping from 100. It is now 95. We're taking this without even you first of even the robot buying any margin call. Okay, you've just made entry with your $100. You've picked $5 as your initial margin. The initial margin is more of like the first buying amount, the amount you exposed in the market to start a trade. That is what we call the initial margin. It is part of the margin. Then whatever balance that remains in your futures account is what we call the maintenance margin, what keeps your position open. Now, the $5 is what you have exposed. So even if you just stop at that point, as long as the price continue going against you, the exchange, it will be like the exchange will be pulling. It's just like consuming fuel. The fuel will be consumed slowly by slowly. So you'll be seeing the maintenance margin reducing. Now let's take, for instance, this maintenance margin reduces to the point where it only remained $50. That means already 50 has been what? Has been given to the exchange. That's in a simple way to simplify it. You have now given it out because you did not predict it rightly. Yeah, the market has gone against you to an extent whereby you have given the exchange to the tune of $50. What you only have as a balance is now $50. Now, what is going to happen is should the market price, okay, after having dropped all this much, okay, I'm not going to talk about it in terms of percentage. It has dropped this much. And what you have available now is you're only seeing $50. And you are unable to trace where the $50 is simply because it is with the exchange. It was an agreement that if it goes against you, it is my win. If it goes in your favor, it is your win. I'll give you, right? Let's take it that at this point, the price reverses and begin going where? Going back up, right? What is going to happen is every other time the market price is rising, whatever was lost, whatever you are not seeing, whatever was given to the exchange will begin coming back. Will begin coming back. It is like you are now winning. You get that? It is you are now winning it. Every question the exchange is asking, you are getting it correctly. So it is giving back to you the $5.
I got it.
Okay?
I got it.
Until a point is going to reach from point of entry where you're going to have your initial, or you are going to have your margin. You're going to reach a point of no loss, no profit. You are now going to see the exact $100, which was in your futures account previously, is the way it is. Now you have reached a point of it is not a win for either side. Not on your side, not on the exchange side. You are at a zero mark. You are at a point zero. You have not lost anything. The exchange has also not lost anything. Now, if you keep on to the trade and the market price continues to continue going up in your favor, that is where now, from that point, okay, from this point, let's assume now, moving forward, from 100, the market is now going in your favor. The exchange will continue giving you 5, another 5, another 5, another 5. Assume you accumulated to the tune of $130. You get that? Depending on what you set as your take profit. If you reach at this point, you can decide to say, you know what? I can close now my trade. I've recovered back my 100. Now I have extra $30 as profit because you actually got the questions correctly. So the exchange, it is a win on your side. So the exchange keeps on giving you, it adds the other side, adds the other side, adds the other side. But for as long as it is against you, you will be giving it to the exchange. You add it the other side. Yeah? You're giving it the other side. But if it goes in your favor, it is the reverse. The exchange must give you because it is you winning. You predicted it rightly. You get that?
Yeah,
that is when now, if that is how the concept. So whatever has moved out, As long as the market price plays in your favor, it comes back. And if you remain in the trade and you still continue winning, that's when now you enter into floating profit. You now begin making profit. Now, depending on how much profit you wanted, then the system will close accordingly because it is an agreement. If you said you wanted a take profit of 30% of your $100, if price fares out up to 30% of your $100, which is $30, then that agreement, the contract expires. The system will now close because it will say, you know what, that is the match you wanted. That is what you asked for. So you win. Have the $30. And that is contract done. You get that? So it comes back. In simple term, I hope I've explained it in the simplest term for you to understand.
Yeah, I got it. Thank you very much. I'm going to apply it now. God bless you.
You're welcome. You're welcome. All right. So so I hope it has been good for everyone. We learned something today, and I hope we meet tomorrow again, same time, and see if we can have something new to learn from. And yeah. So I think you're going to have a class. I don't know. Leader Doris Angel said there will be some class. You can have time as well. You go and attend. And yeah, we'll see how to move through. But otherwise, thank you so much, guys. Thank you, all of you, for being part of this class. Let's keep learning. Let's keep moving. And yeah, the best is yet to come. And forever, if you understand some of these few things, trading is supposed to be easy. So trading is supposed to be simple. There's really nothing complicated in trading, especially if you apply it correctly. If you understand just a little bit of psychology, there are a lot of hidden things that we need to understand, just like from what I just explained. Money is not just there. If you trade in Binance, Binance has put a lot of money on that exchange. But remember, Binance is also a business entity. It's just like betting. You're betting. If you bet, what kills us is the greed. You have, for those who have ever done betting, I've actually done that as well. What kills you in futures trading is greed. Imagine someone has 1,000 stake, only 1,000 shilling, but someone wants to win 1 million. Can you imagine? How possible is that? You have 1,000, then you write, you choose very many teams because you're interested. I want 1 million. So you're going to keep on choosing teams, and the more team you choose, the lower you're reducing your chances of winning in that bet. Instead of only saying, okay, Manu is playing today against Burnley, okay, Manu will win. Arsenal is playing Liverpool, okay, Liverpool will win. Then you just choose two and say, okay, I'm going to trade. I'm only going to predict these two. Let me put my 5,000, my 5K. And if all of them win, man, you've won. Even if you only get a profit of 2K, it is okay. It is rather than losing the 5K, right? Now, for you who is trading, who is betting with 1,000 and you want to win 1 million, are you really serious? Yeah, are you serious? That's how people get educated. Futures is easy, is nice, is simple, but then it is us who complicates it. We make it more complicated for us. We lose so much because we want to use little to win so big. We don't know that even the exchange as well wants this very same money. For you, the little you are exposing, it is the little the exchange wants. For you, you want so much from the exchange, but you may not get it. But if you get little, you will be collecting a lot from the exchange. Yeah? You will be winning. If you're trading in Binance, getting $1, $2, $3, hey, it is not going back. You're taking it. You're taking it. You're taking it. Other than using $50 and you want to make $300 in a day. Yes, it is possible, but it can always not be the same all the time, right? Yeah. Because, yeah. All right. So, yes, please.
Please, yes, this is Isaac from Mbale, Uganda. Okay. I also come from Lira. I think you look like my brother, your accent.
Yes, I'm from Lira.
Now, yes. Now, I think if you could try to explain, people are so much confused about funding about funding fees. Some of my downlines even come to me that, does it mean I've been liquidated? I think if you could spare just like 2 minutes to explain funding fee.
Okay, let's have that tomorrow. I think it's one thing that I'll talk about that tomorrow. Okay, we shall talk about that tomorrow. You want to understand that concept of funding and yeah, and then the liquidation aspect. I think we shall explore more on that tomorrow, and then we see how we can move on. Yeah. But let's avoid the idea of betting with 1,000 and you want 1 million. That is what is going to kill you in futures trading. Look, the idea here is you have $100. The best you can do is, how best do I increase this $100? You don't have any other source from which you're going to get another extra fund. But now the exchange is giving you an opportunity of a leverage, of borrowing, using what you have as $100 to as a collateral to borrow more from them. So that if you win, it is yours. There's no condition attached. But if you lose, the 100 is taken. So it's just how strategic you're going to use the $100 as collateral to borrow. And don't borrow so much. Use $100, borrow maybe $500. That is 5x. Now, out of the 5x, at least you have an amount more than your $100. Because if you had traded with $100 and your intention was to take 2%, 2% of $100 is just $2. But this time you have $500. The 2% is equivalent to $10. That's a huge difference. Now, if you can have that and just know how best to partition the 500, okay, man, you'll make money. You'll turn the $100 into the $500 real capital in a very short period of time, as long as you're taking your $10 for every trade you take. Other than you have $100. Now you are going for a 50x. Now you want $100 to turn out to be $10,000. $5,000, really. And then at the end of it all, you don't know how to manage your wallet well. You don't know how to manage your risk well. And then at the end of it all, you enter big, and then you get liquidated, because the more leverage. For me, the issue is not the leverage, by the way. I can even go for, personally, I even trade with 100x. I've chosen Solana. I trade Solana, I trade Ethereum, I trade Bitcoin. I go for 100x with my $100. But then I know how to manage. Oh man, the initial margin is what makes the difference. How you're going to partition that, and then how you're going to pick the initial margin, the percentage you're going to expose, my friend. That is the game changer. Okay, that is the difference. You can make so much. Okay, as long as you know how to manage this risk. All right. So with that said, I think let's end here. Let's meet tomorrow, God's willing, inshallah, and then we see how we can move from there. Rather, wish you the best, guys, and have a blessed Tuesday morning. Love you all.